Hi, I'm Mike mruger. I'm the managing partner at Greenbush Financial Group. On May 15th, the SBA released the long-awaited forgiveness application for the PPP program. So all these small business owners that took the Paycheck Protection Program loans a few weeks ago, now we're finally getting the first look as to what the application process is going to look like to get those loans forgiven. They also provided some clarification on what expenses would qualify and not qualify for forgiveness, but they also left some areas gray still that we might need further guidance on. I'm going to highlight some of those in the video today. But the main piece of this, I'm going to walk you through the application so you know how to complete it, how to run the calculations that are in this forgiveness application, as well as some additional guidance. So what is the forgiveness process going to look like? So you have 60 days from the end date of your covered 8-week period to submit this forgiveness application and supporting documents to your bank. And from the date you submit that application, they have 60 days to either accept or reject the forgiveness amount that you listed. Now, the reason why this is important is similar to what we saw on the calculation side, where we saw banks calculating things different ways because there wasn't a lot of guidance. We might see some of that on the forgiveness side because I'm going to point out those gray areas today. And the reason why I'm going to do that is I want you to make note of it, because if you have some of those expenses, now might not be a bad time to go to your bank to say, how are you going to handle these? So when you submit that forgiveness application, there's a high likelihood that it's going to be accepted by your bank. So before I jump into the application, I do want to highlight a few pieces of guidance that we've received that are really important with this PPP program. So number one is, when you're forgiven these amounts, it's not a taxable event to the employer, but you cannot take a taxable deduction for those expenses paid as of today. I know there are potentially some legislation in the works to change that, but as of right now, it's looked at as a double dip, because essentially you got tax-free money from the government and you took a deduction as if you paid it with your own money. As of right now, that's not allowed. If you received any money, any grant money from the EIDL, which is that separate SBA loan program, that will come off of your PPP forgiveness amount as part of the application process. And the third, which is important that we've been waiting for, is any contributions to retirement accounts for owners or payments of health insurance for owners is specifically excluded from forgiveness amounts. So they're not going to allow that. So the application is an 11-page document that's got a lot of terms, a lot of calculations, a lot of worksheets, so it can look pretty intimidating out of the gates. But I'll say this, if you are a sole proprietor, this application is going to be fairly easy. If you are an employer with employees, but you didn't reduce headcount, you didn't reduce wages, the application process is going to be fairly easy. If you, however, are an employer that reduced headcount or had to reduce wages by more than 25%, this could be a pretty complex process because there's a lot of calculations, a lot of safe harbors that we're going to go through as part of this process. Okay, let's jump right into the application. We're going to start with the PPP loan forgiveness calculation form. You're going to see all your general information on top, your PPP loan amount, if you took that EIDL advance. And let's skip down to the payroll schedule. So you're going to select your frequency, the covered period. So the covered period is that 8-week period. It begins on the date that the money hits your bank account for the PPP loan. Now below that, you're going to see Alternative Payroll Covered Period. Now what that is they're going to allow you, for purposes of calculating your payroll costs, to start that on the next pay date after you received your PPP loan. So if I received my Paycheck Protection Loan on May 5th and my next pay date was actually May 10th, I can begin my 8-week period for purposes of just calculating payroll costs on May 10th and then that 8-week period following. Now, right below that, you're going to see a check the box that says, if the borrower received PPP loans in excess of $2 million, check here. If your PPP loan was for not more than $2 million, do not check that box because you are welcoming that audit that the Treasury warned about, that they're going to be automatically auditing loans in excess of that amount. So let's jump right to line 1, which is the calculation of payroll costs. Now I'm going to have you skip over to page 9, which is the PPP Schedule A worksheet. Now I call this the beast because this is where most of the information for the employees, their compensation, if they're part-time, full-time. But I first want to state who does not go on this page. So who doesn't go on this page are owners, self-employed individuals, partners, or any payments you make to independent contractors. This is only for non-owner employees. If you're a sole proprietor or you only have owners as part of your entity, you don't even have to complete this page. This is for employees only. Now, the reason why you see it separated into table 1, table 2, two sections is the top table is for any employees that made $100,000 or less in 2019, and the second table is for any employees making over $100,000 in 2019. The reason why they did that is, as part of the PPP rules, if you made any salary reductions for employees making under $100,000, then that could jeopardize the forgiveness amount. So within this top table, you have the employee's name, and then we've got the cash compensation column. Now that cash compensation is going to be gross compensation for each employee, and you should not have anyone in this table that has more than $15,385 listed, because that's the max comp that any one employee could have during this covered period. Now, the one question that's come up that's still kind of this gray area is it comps when it's paid or when it's actually incurred? So an example is, if I got my PPP loan on May 5th, but then I ran a payroll on May 6th, but technically that payroll is for the previous 2 weeks, do I get to count all of that? It's just like, that's one of the things that's kind of unclear, because if it's when it's paid, like what if I have bonuses to pay for the first quarter? Do I get to count all that because it just happened to be paid during that kind of covered period? So this is where one of those questions that go back to the bank and say, how are you guys going to handle that? If it's when it's paid, how far can I go back before it's really not considered for forgiveness? So the next column is the average FTEs, which are the average full-time equivalent employees. So they're starting to assess your headcount during the coverage period. And the way they do this is that they're looking for the average hour worked per employee. So an example would be, if I had an employee that worked 320 hours during that covered period, it's 320 hours divided by 8 weeks equals 40 hours. Then I'm going to divide that by 40, so I end up with a 1. So I would enter a 1 in that column for that employee. Now, anyone working more than 40 hours, the max you're ever going to put is a 1. But for people that work less than that, so if I have another employee that works 240 hours, I divide that by the 8 weeks. That means they work 30 hours per week, divide that by 40. I end up with 0.75. They want you to round it to the nearest tenth. So really I would enter 0.8 for that employee. So they're going to allow you to calculate this average FTE 2 different ways, and you get to select the better of the 2. So the one I just described, which is kind of the long math way, getting down to the exact amounts. The second is a simplified method, which says anyone 40 hours or more, you put a 1. Anyone under 40 hours, you just put a 0.5 and you take the average. And you get to take the better of the 2 average, either the long math way or the simplified method. So let me show you an example of how this would work. So if I have 4 employees, Mary, Jim, Sue, and Dan, if I do the long math method where I'm actually calculating it down to the decimal, Mary's a 1, Jim's a 1, Sue and Dan are my part-timers at 0.4 and 0.2. So the total ends up being 2.6. But if instead I do the simple method, which Mary and Jim are still a 1, but now Sue and Dan are my part-timers, which I get to count as a 0.5, now the total equals a 3. Since I really want to go for the higher of the 2, I would choose the simple method over the long math method. So now we'll review the final column, which is the salary hourly wage reduction. So in this column, they're trying to determine if you reduced an employee's wage by more than 25% during the covered period. Now, they compare the covered period, which is that 8-week period, against January 1st, 2020 to March 31st, 2020. So that's what they're comparing. It's a multi-step process for each employee. So the way they do this is, in step 1, you take the wages that you paid to that employee during the 8-week period and you times it by 6.5 to get their average annual wage. Then next, you take the wages that were paid to that employee between January 1st, 2020 and March 31st, 2020, and you times that by 4 to get that average annual wage. And then you divide the answer you got in number 1 by the answer you got in number 2. And if that percentage is higher than 75%, then there's nothing you have to enter in that salary wage reduction column for that employee. You only enter something in that column if the percentage is less than 75% that it results in that amount. So even if you have amounts listed in that final column because you reduce salaries by more than 75%, you may still be able to have your loan completely forgiven if you satisfy one of the many safe harbor calculations that are yet to come later in the application process. But really, once you're done with that, you go down, you fill out the table 2, which has those 100,000 plus employees from 2019, and it's much more simple because you don't have to do the salary reduction calculation. And then the final step here is to do that headcount calc, which is your average FTEs versus what's allowed under the PPP loan criteria to avoid a headcount penalty. And the way this works is your average FTE headcount that you calculated will be compared against one of 2 periods. So you get to choose between either comparing it to February 15, 2019 through June 2019 or January 1st, 2020 to February 2020. You get to choose which one works out more favorable for you. And if you are a seasonal employer, you can choose either of those 2 or any 12-week period between May 1st and September 15th, 2019. If you find during that calculation that your headcount has not been reduced in any of those comparison periods or it's higher for some reason, then that bottom section of the form labeled FTE reduction safe harbor, you can completely ignore that section because that section is if you have a lower headcount now than during those comparison periods, then you will run those other calculations to see if you satisfy a safe harbor, which means your forgiveness amount, if met, will not be reduced if one of those safe harbor provisions are satisfied. So now that we have that done, we're now going to move over to the PPP Schedule A, which lines 1 through 5, you can just carry over information from the worksheet we just created. The boxes are labeled. Line 6 is where you enter the amount that was paid for employee health insurance by the company. Line 7 is the amount that was paid for employer contributions to the retirement plans. Again, for both of those items, the contributions made on behalf of owners for the retirement plans or health insurance do not count into those figures. That's really just for the employees. And this is one of the other items I want to note about this section is that whole when it's paid, like the question for us is if my coverage period ends, let's say May 28th, but I pay my health insurance premium on May 27th for June, does that count? I paid it in the coverage period, but wasn't for June. We don't know the answer to that yet. And that's another one of those questions for your bank to say, how are you going to handle this with a forgiveness application? So now we're down to number 9, which is where the owner's compensation comes into play. Now, none of this carries over from that worksheet because that was just the employees, but the owner's comp is capped out at, remember, that $15,384 per owner, which is that cap forgiveness amount, but they also put an additional restriction in there that says the owner comp has to be the lower of either that $15,384 or the 8-week equivalent of the 2019 comp, because they don't want owners that only made, let's say, $50,000 this year claiming that they have a $100,000 salary in 2020 and really grossing up their comp during the forgiveness process. So you really have to look at the lower of the 2. Item 10, you just total up all the payroll costs from those various line items. Then you go down to right below there, and if you had no reduction in employees or reduction in wages, all you do is simply check that box, and then you go down to line 13 and you enter a 1. If you have a reduction in employees or wages, then you would have to fill out line 11 and 12. So now after long last, we get to return to the PPP loan forgiveness calculation form. So on line 1, we've got the total payroll costs, which we just calculated on Schedule A, line 10 that we will bring over. Some of these other qualified expenses for forgiveness in addition to payroll costs are the mortgage interest payments. So any interest on mortgages that were in place prior to February 15, 2020. You've got the business rent or lease payments. So any leases that were in place prior to February 15, 2020 qualify. And business utility payments. So this is your electricity, gas, water, transportation, telephone, internet access. That service was in place prior to February 15, 2020. The rest of the application, lines 5 through 11, is really just kind of carrying information over from other worksheets or from other part of this forgiveness application. But I can't stress enough, just make sure you have the appropriate documentation in place to justify all these expenses when you submit your forgiveness application to the banks. And also, if you're one of those employers, as I said before, that have had a reduction in headcount or have reduced wages below that 75% threshold, really work closely with your professionals to determine which safe harbor option you may qualify so you don't have to deal with losing part of the forgiveness on your PPP loan. If you have any questions, please feel free to reach out to me at moneysmartboard.com. Thank you.